You want to know something? If someone ever comes to me and says, "Hey, man, I don't need this velocity banking stuff, and I'm gonna pay my mortgage with extra payments," I just kind of smile and say, "Yeah, congratulations, man, you're gonna do it." And then you know what I think in the back of my mind? Probably after a month or two, they're gonna give up because extra payments is the default option that everybody can do, and pretty much no one does it. And the way that I think about it is kind of going to the gym or starting a gym membership in New Year's, right? And so if one of my friends came up to me and said, "Hey, you know what? I have this great idea. I want to start getting healthier, and I actually want to save some money too. So I'm not going to go to the gym now. I'm just going to start going to gym membership in New Year's." And of course, me being a positive person, I just say, "Yeah, man, go for it." And then in the back of my mind, I'd be probably thinking, "Oh man, you're probably gonna give up after a month or two," right? But I mean, hopefully it would happen, but I wouldn't discourage anybody from doing it. Like, I don't think there's anything wrong with extra payments. But what I think would probably be more helpful is, hey, sometimes it's a little bit convenient to spend more money to get what you want. And if there's anything that helps you or it makes it more likely that you're going to complete your goals and possibly even outcomes in the end, I think it's okay to spend a little bit more money, right? I mean, that's like the whole point of, let's say, hiring an employee. You spend money so that in the end, you have a greater outcome than if you just do everything by yourself. And so, think about hiring a personal trainer. It's not the cheapest option if you hire a personal trainer. Like, saving the most money would mean that you start a gym membership in New Year's and not hire a personal trainer, right? And if you did hire a personal trainer, there's going to, you might be motivated, you have someone to work with you one on one. It's not going to be the cheapest, right? It's not going to be the cheapest. And that's kind of how I think of like extra payments in lines of credit. Because think about this. Let's think about the worst case scenario. Let's say, you got a 0% loan, 30-year mortgage. So think of it as like a free gym membership in New Year's. Like, you can only get in New Year's. Free gym membership you can only get in New Year's, right? For 30 years. And let's say, I was the dumbest mother effer on earth and decided, like, hey, I'm going to do this velocity banking thing because loans are bad, even though I have a 0% loan. And I'm using an 8%, 50, or even 15 or 30% line of credit to pay off my 0% mortgage, right? Like, what is, because I'm so ignorant, how can I be protected from my ignorance, right? So let's kind of think of it that way. And so if you just kind of do the calculation with the worst case scenario, which is a 0% loan, and use an 8% line of credit to pay it off, you only overpaid by $1,800. Okay. If you decide you're going to keep consistently using it. Now, think about this. If you use a line of credit for even one day, you've essentially overpaid more in interest than if you just kept making the monthly payment for 30 years, right? So then we have to ask ourselves, the why do we even use a line of credit? And we'll talk about more realistic interest rates, like 3, 4, 5, 6, right? Those types of interest rates versus just making extra payments. Well, there's nothing wrong with making extra payments. It's just basically the cheapest option. If you pay a 0% loan with 0% money without a line of credit, it will be the cheapest option, right? Like, use a line of credit for one day in that scenario, you're going to overpay. Now, just like going to the gym in New Year's, you're not going to continue after a month because it is the default option that nobody does. Because anytime you introduce friction in the process, you're not going to do it. This is why companies spend so much time and energy to figure out how can we make things super easy for people to spend money and take away the friction. Now, ironically, when you have credit cards and loans and you overpay them, they make it incredibly inconvenient for you to use that money for certain things, especially with loans and in certain instances credit cards, right? I talked about if you put all of your money into one credit card and then you decide that you happen to have another credit card whose bills are due soon, you can't use a first credit card to pay the second credit card, right? And so my point is this. There might be certain instances you might be overpaying. I'm not saying the interest rate doesn't matter, but in the end, just like hiring a personal trainer or even hiring an employee, if you do it right, because I know a lot of times people these days get frustrated that there are just no good employees anymore, right? But in the end, even if you spend a little bit money, but the outcome would have been greater than if you just kept saving it as much as possible, and then you're not going to do the thing that you thought you were going to do, like going to the gym in New Year's. I would rather have you save spend a little bit of money. Let's say, even $1,800 on a 0% mortgage. I'm not saying I'm actually advocating this. I'm saying this is the worst case scenario. I would rather see you make progress, spend a little bit more theoretically than you would, than do nothing at all, which is the vast majority of people. Right? So, in conclusion, I have exposed that velocity banking is a scam. Yes, if you have a situation where you have, let's say, a 0% loan and you make extra payments, you will never pay interest. And if you use a line of credit for one day, you will pay more interest just using that line of credit for one day to pay off a loan. Thank you very much. This is my presentation.